Uncertainty continues to grip the tech industry as fresh signals emerge regarding tariffs on imported electronics. Analysts now worry the developments may further shake consumer confidence and exacerbate those inflation struggles that still persist. For more, let's head to Melbourne. We're joined by Kyle Rodda from Capital.com. Great to see you. It has been a big week since we last spoke, obviously. What do you make of it all?
Yes. Primarily just the uncertainty and the on-again, off-again element of this. There doesn't seem to be a coherent strategy or end goal in mind. And, typical, I suppose, of the Trump administration, there's a lot of sort of improvised policy going on here, despite, I think, other people trying to potentially rationalise the decision-making. I think the weekend's developments are a great example of that, although they are good for the markets because, we're seeing some of these critical inputs to, smartphones and things and other tech-related products coming down from that 125% level. There's no sense on what the tariff rate will actually be and why this is actually being done. The confusion mostly coming from that Truth Social post coming only a few hours ago that these aren't exceptions, despite the clarification of the executive order explicitly saying that there were exceptions, and that there will be a continued push to try and reshore US manufacturing. So the markets are taking this well again because anything but 145% or 125% tariff is ultimately going to be a good thing at the margins, but it doesn't do anything to address the uncertainty. So, maybe the worst is behind us, it could be said, but there's certainly not enough certainty there that the volatility will diminish particularly quickly or give investors the green light to really buy into risk assets like stocks.
Let's have a listen to Howard Lutnick, who spoke on one of the American morning programs.
The president knows the law. The president's general counsels know the law. They understand this, that Congress has passed laws that gave the president the ability to protect our national security. We need to make medicine in America. If you don't think that's national security, you're not thinking it through. We need to make semiconductors in America. We need steel and aluminum in America. We need to manufacture in America. If we just run gigantic trade deficits and sell our soul to the rest of the world, eventually we are going to be the worker for the rest of the world. We're going to be the thinker for the rest of the world, but they're going to manufacture. And if someday they say, gee, we're not sending it to you, we'll be nothing. So I think the president has national security in mind, and he's here to protect America.
They're really pushing that national security point, aren't they, wherever they're coming from in Trump's cabinet. But it is a good point. The Wall Street Journal, and it's been interesting watching many of the Murdoch papers ask the question, is it worth it? What are your views?
Yeah, I mean, on sort of Lutnick's point, I think the issue isn't that, that idea in and of itself isn't compelling. It's the incoherence and contradictions with the other side of Trump's administration. It might be Scott Bessent, might be sometimes what the president says himself as to what the tariffs are actually trying to achieve. A great example is, is it for national security and to protect industry, or is it a negotiating tool to ultimately make, more free trade? Those things can't sit with any kind of compatibility. And it sort of says that, again, this is kind of like a bit of a mishmash policy. And arguably as well, just based on the reading I've done about the sort of internal machinations within the Trump administration, there's a bit of a power play going on between sort of a marketeer, Scott Bessent kind of camp, and then the kind of very hawkish trade attitudes from Peter Navarro, and they're clashing on what this policy should actually be. I think Trump that doesn't really have the ability to sort of game this out himself, so he's being sort of swayed by each camp progressively, but it's sort of leading to this very mishmash kind of a policy where no one really understands what they're trying to achieve here. In terms of what the economic ramifications could potentially be, the uncertainty is more or less guaranteed, if nothing else, to sort of slow economic activity going forward. And even if these tariffs are removed in full at some point in the near future, the lack of confidence that the Trump administration has engendered, not just in the US government and its financial position, but also the US economy itself, within the US economy itself, businesses' ability to plan and what have you, means that that's going to have a dampening effect on economic activity. There's also the concerns about sort of short-term inflationary risks and how they arise as well. So it's this kind of general incoherence that's really bothering people. And again, like even when you have pretty much Republican mouthpieces like Newsmax or Fox News sort of saying that this doesn't make any sense, what are we doing here? You kind of know that there's a really big splintering going on and an incoherence to the policy that no one can actually really wrap their heads around.
Yeah, it does sound like the sort of thing that a bunch of guys sitting in a circle at the pub all saying exactly would come up with without any actual structure to what it's going to be. And here we are. Let's talk about the China element and let's talk about the exemptions now for tech products. China snapping back saying, actually, we're not going to be sending some of these semiconductors you need. What do you see as a likely outcome? Is this just a negotiating tactic? Will China buckle, do you think? It's $1 million question, but these exemptions on tech products, where do you think that idea came from?
It came from, well, arguably, apparently Tim Cook and the executive team at Apple were on the phones heavily to Scott Bessent. I get the sense that Scott Bessent is actually really quite talented when it comes to getting the president's ear and sort of massaging him in a particular direction. You can kind of see it to start with a few months ago when they were talking about interest rate policy and how they should be sort of managing interest rates in the United States. Over the last week or so, he's been able to convince the president about the risks that he was posing to the bond market, and increasingly he seems to be channeling some of the concerns of big Wall Street executives, especially those major tech companies, about how dire these tariffs would be on those businesses and how that would actually undermine US national interests as well. So there's that element to things. How China plays this, the problem is now is that both sides have to keep face. Both sides have to feel like as though that they're defending the national interests and national prestige, while also hopefully de-escalating things enough that they don't do significant harm to their domestic economies and again undermine their own interests. The problem is trying to work out what that off-ramp would be so that they can kind of de-escalate things. Clearly China wants to try and turn the screws, probably somewhat of a pun there, when it comes to some of these chip parts, semiconductors in particular, which is of vital significance to the United States and the rest of the world. It's sort of been said that semiconductors are the new oil when it comes to sort of strategic importance to an economy. So again, I don't really know how this kind of de-escalates. The problem is now is that we're at this kind of loggerheads where neither side wants to back down because they can't really afford to lose that prestige or lose that kind of bargaining position to defend their own interests.
Everyone asking me a question about their own stocks at the moment. Talk to us about what's been happening on the ASX, what we're likely to see this week.
Well, it looks like we're going to get a bit of a pop at the open. Gold's off, so a bit of a risk-on trade. We've got the Aussie dollar back through 63 cents, and US futures are popping. So that goes back to the point we were saying before, where the markets are going, well, at least we don't have, even if we don't have certainty about this, these exemptions, are much better than the 125% tariff on some of these products we're going to get. So we have to price that in. But there's underneath all of this is the uncertainty and the crisis of confidence unfolding, where not only are we seeing likely a recessionary impulse coming through the United States, but cracks appearing in parts of the financial markets, which make it very, very concerning about whether this will turn into something a little bit more systemic or not. So really, it's going to be a matter of, for Australians, waking up every morning, checking their phones and seeing the latest headlines, whether we get a reprieve and a 10% rally in the S&P 500 like we did last week, or whether we get a tweet like we did only a few hours ago that walks it all back. It's just this volatility that's going to continue for a little while yet. What I would say is that if you do want to see kind of a lasting turnaround, and we are arguably seeing that a little bit now, it's that the best case scenario is that all tariffs get walked back. This was just a negotiating tool, and we sort of move on, and it's a thing of the past. Realistically, get a little bit of certainty. That's fantastic. Or some concessions where the worst case scenario can be priced out, and that's where we are now. So if that sort of last point there continues, markets can continue to grind higher from here, but the rug can be pulled at any moment. So you just have to be very privy and sensitive to that.
And just finally, gold, obviously, safe haven, hitting record highs. Goldman Sachs predicting 3,700.
Yeah, it's down this morning because of those trade developments, but it's looking very constructive. And a lot of this is because of the crisis of confidence in the US government, and particularly major central banks across the world deciding that they probably don't want to hold as many US treasuries as they used to. So we'll see how it goes. If we start to see those kind of cracks appearing in the financial system again, you can see gold drop actually quite dramatically because there might be some forced liquidations. But if you look at the structural and fundamental forces, it's still looking very constructive out there. And I have the sense that it will continue to trend higher over time.
All right, we'll leave it there for now. As always, Kyle Rodda, appreciate your time. Thank you.
Thank you.